Supposedly we are live now. US is a large market and financial center which will find its ways into our, well, that information just flew by. Okay. Recent breakouts, SRS, Aggie. No, Aggie. That's interesting though. That's a real estate ETF. That's a short real estate Aggie. I think tonight, okay, we have class tonight, by the way, guys. I think tonight we're going to talk a bit about reading the bullish strength of a chart. I think that could be very important. Let's see. What else they got there? SDRL. Oh, it's almost the same as that last one. SDRL, Aggie. Very similar. TCOM. Trip.com. Oh, I see. There's another one called Trip. I thought, okay, that's TripAdvisor. Advisor flying out off of a bottom reversal. Definitely sitting at a key pivotal area there. $28. Next ER. TripAdvisor will be very important for its future price sentiment. But this one, TCOM, I think it's been a little bit more consistent. Yeah, but no, the fundamentals have been not looking good lately. They must have had some guidance because going into ER, it seems to be doing quite well. But the last fundamentals don't paint a pretty picture of consistent growth. Bob, good morning, buddy. Interesting. All right. And then ALPN I just looked at, and Vera, which is only up 2%. Something to look at. Pre-market, we got Mint, but I don't know what is it, a penny stock? Okay. Yesterday, Rent the Runway. What is this? Do ready to wear and contemporary designer apparel services. It rents designer dresses, gowns, and accessories for women. Wow, that is so niche. Rent, where is that? I just saw that. Rent, the market cap is 26 million. Let me look at the annual growth here. Pretty flat. So they're not really doing anything to aggressively grow or even grow. They're just flat. They're doing well. They're flat. And yet very bearish in the price action. Let's see, what else can we take a look at here this morning? We got 20 minutes before the open. I will talk about the market again, but essentially PPI is coming in better than expected, and jobless claims lower than expected, which that's a positive. Fewer people claiming that they're jobless, right? And compared to the CPI, and it was sort of like CPI was a little bit hot. The Fed actually had a very, I would say, positive outlook, and it definitely was kind of here nor there, neutral. Okay, so CPI, little hot, not a lot, little. Fed, neutral, and then PPI, which can be considered more leading, a little cooler, which is great. Looking good. So all in all, we kind of went like, and we are moving up this morning. It's hard to predict what this could mean for the day. But I think now that we have so much behind us, I think what we'll see is some controlled buying. Might not be today, it might be today. I mean, prices are still the lowest, and they might not be so easy to beat down because there's just a ton of support here and milestone pins in the journey, in the economic journey here, which can't be denied now a month moving forward. So there's quite a bit of support now at the lower levels. So I'm thinking perhaps today might be an all-day green kind of buying day, except that I do expect rotation. It'll all be a lot easier to talk about, to know, to assess after about 20 minutes to an hour and a half of trading has transpired from the market open. We would literally be able to see sector by sector what's going on. Bob, Carl, welcome in. What was I going to say is that when everything is moving up, we call that all tides rising. I do. And all tides are rising and all, I don't know why we call that that. Damn, somehow that's what it is. And that would be what you would call broad market response. And that's what we like. We don't like sort of rotational, only a little small section of the market is responding favorably. That's not, can be not meaningful enough. I suppose there would be times during advancements in technological revolutions, maybe like AI or something, where one field could just overshadow everything else so much that even a small sector industry uh, breakout move could be actually meaningful and significant. But I don't think that we're going to see that. I've made the analogy before about how through from the 80s and the revolution of digital, from analog, whatever we had, they even had analog computers way back in the day in the 40s. But once we figured out digital, then little by little everything in every industry that could be digitized or digitalized slowly became digitalized. And I think like answering machines was a really interesting transformation, because it's just little by little everything just started to get taken over, and you could record your voice onto a memory chip in an answering machine. This was pretty revolutionary at the time, and it would go from a tape cassette thing where it would rewind, and then there was like controlled beeps on the thing so that it could go to each message, fast forward to the next message, that kind of thing. But it was all on analog, analog tape. And you'd have these little mini tapes in there, one for your outgoing message and the one for the messages. You get home and there'd be 7 messages on, you push play and everything. But then that got digitalized. That whole process got digitalized. And after that, you just had a machine. There was no tapes. In fact, there was no moving parts at that point. It became digital, to the point where now we have, LCD screens with internet on our refrigerators, with sensors that can tell you if you're low on milk, or your washer machines. Little by little, everything by a technological change starts to go that way, and a big part of what's happening now, AI is a technology that's on top of digitalization. So in other words, it in theory only works in the digital world. AI can't process without a digital world. I mean, yeah, I suppose, so we just keep layering. Carl says, at least I'm not the only one that old, Bob. I recall that change well. Bob and Carl, the veterans in here. Uh, so AI is not going to affect carpentry. Or maybe it fucking will. I don't know with it, but uh, it's going to most radically help things that are already quite digital. Like for instance, like CRM, Salesforce. You know, but Microsoft just announced something called Project Stargate. They're putting This is no small uh, thing that Microsoft is doing here. They're putting $100 billion into pushing ChatGPT and AI in their new project called Stargate. $100 billion bet on something that's really big. It's a tenth of a trillion, which is a lot. And I think Microsoft's worth like 3 trillion. So they're not betting the farm on it, but that's just one of the hugest bets out there. Incredible, you know. And so anyway, when you see CRM make an announcement like, or any of these companies that are highly digital based, they're internet based and everything, right? So um that they're gonna invest into AI. They're going to bring on AI. They're partnering with AI. They're going to, set aside funding for this. They've secured funding for AI, etc. Anything about that, you should take very seriously because they'll use it to transform themselves very competitively. And it is a race. It becomes an arms race, kind of um, in every industry to adopt and enhance their business with AI. I think it can cover so much. AI can cover internal operations, but it can also cover customer experience. And there's just so many ways that everything's going to be improved in the future now with AI. Anyway, look for those technologies, in over the next 50 years of your, trading career. Look for those uh, technological revolutions when they're happening and figure out you can and trying to think logically about where does it really make a difference. You don't have to predict anything. I mean, you don't really have to predict. You're just a trader. Is That's the most important thing you can be, but you want to make sure that you're fishing in the right river. So you want to know that you're in the right state. Oh, and are sitting next to the best river that season, and you want to get good at that. That's important. So anyway, this morning, okay, we've got 11 minutes till the market opens. Um, the market and the economy are speaking that they are doing okay. I mean, it doesn't say holy crap. There's no holy craps right now. But the trifecta of fuckery, by the way, is behind us, and we now know that we had a pretty level, um, somewhat neutral, total whole reporting from CPI, Fed, and PPI and jobless claims this morning. It all looks pretty okay. Other things can set the market off, obviously downward. Um, but we're entering ER season, and I have a feeling that if all those economic metrics are correct, that we're going to see the ER results as well. And I think analysts are going to be wrong because they're usually pretty conservative and laggy, and they make linear projections. They don't make parametric projections really. And I think we're going to see a lot of surprise beats. It might not be this season. Maybe it'll be even after the election and maybe it'll be next year, but that's coming. But what I don't think is going to happen, and if it does, it'll be surprising to me. And that's fine. We adapt and change. But what I don't think is going to happen is surprise losses and companies showing really bad results. It doesn't look like the economic reports are forecasting that. So this is going to be a very good season for price appreciation. The only thing is where is it going to come from? That's going to be the very specific thing that will be sussed out. And we'll be able to see that by analyzing charts that are perking up. Perking up is really good. Setting up, anything right now that's at the top of the range and about to break out of the consolidation area on the market at the bottom of its range, just slightly getting positive, that's a leader. That's a leader in the making. And it's not quite there yet, but it's going to pop out today. or whenever the market does decide that we're gonna we're gonna push again. So, and continue to share if any of you find any tickers in the group, share in the group or share in here. Anything that you want me to look at, because I'm happy to look at anything and everything, and it only takes a second to do so. But all right, so we covered ALPN, we covered Vera. Now, what I want to do here is check the extended hours morning pre-market trading to see what's up in our list of hot stocks. And yeah, ALPN is at the top, but unfortunately it's being bought out. I believe this is the buyout. Let me see, double checking. Yeah, this is the buyout. So I'm taking it off the hot list. But next up is LPTX. Let's take a look. Okay, this is basically penny stock type of stock. Previously hot stock, and it is up a smidge, but really not on enough volume. I'm going to even take it off our hot list. Boop. NKTR, excuse me, is up 5%. That's a beautiful looking chart that's appreciating, appreciating, and moving up the right side. And it's only just in the last couple of days become a dollar stock versus a penny stock. You can pretty much still classify it as a penny stock. Nectar Therapeutics, NKTR, is up 5% this morning, but this is a nice high type flag here. It's not a holy grail, is it? Wow, 63% in 3 days, though. This is a penny stock type of trade for you penny stockers. Something interesting going there. Some interesting price moves going on there on NKTR. GNE at $15. No, see how this is just down, 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 down. No, not in love with that one. In fact, I'll take it off the hot list. ASPI at $4. This is a beautiful penny stocking stock here. ASPI, good luck to you. DNK at 58 bucks. This is just not bullish enough, and 2.7% ADR, not strong enough. It is indeed in an uptrend. It's just not bullish enough. Maybe it's okay depending on the liquidity and the options. Maybe it's okay for some spreads. Vera up 4%. Okay, this is like a holy grail looking. Let's see what the move was. 200%. 171% in 15 days. Vera is definitely holy grailing. It's a holy grail qualifier. It's just like, when is it gonna, go on its next run? That's extremely hard to predict, and maybe it won't even happen. But it's, holy grails should not be ignored. Put Vera on your, holy grail list. I wonder if it's on this one over here. Very. This is the holy grail list. It may have not qualified on my scans for some, particular reason. Crazy time, says Carl. Yeah, it was. What else did you say? Yeah. So cool. They got rid of that answering machine because it was all digital. Those were really cool. I had this one. Anybody else have this one? I had this one. It was like a little black wafer, about 8 inches by 6 inches, and it had a red like number on it. And then you had like three buttons, little small buttons for recording your message, playback, that was about it. And you could call in. That was another cool thing about those technologies. Back then, this was the new thing. You could call yourself. That was crazy. You could even do that in the tape days with some of them. But you could call yourself and go through a guided menu, just to press a certain code on your phone so that it would know you were the owner and not someone leaving a message, and it would go into the system and you could retrieve your messages. That was amazing advancements, and you thought you were so cool with your giant brick phone. Back in the days when these things came out. But you know what? The kids today, they think, oh yeah, 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 you guys are boomers. Yeah, the kids, they want to talk shit. Guess what? Those fucking monolith screens that you have that you put on your head and you talk on, those are going to be looked at as ridiculous old school in about 20 years. We'll be communicating with chip implants and telepathy and uh, to wear one of those. Another thing in like less than 100 years, honestly, less than 100 years. We got 4 minutes here. Another thing that's going to be looked at as ancient, old school, ridiculous, like holy, like talk about old, is death. That's going to be a very strange thing. You're going to watch a movie. Somebody gets shot, right? Or somebody dies of some reason. And people are going to think, what's going on? Why doesn't he get up? Why don't they, fix him or whatever? He doesn't have the nanobot in him. What the hell's going on? And people are going to wonder what death was. They're going to think it's so strange that you could be wounded mortally. Death itself, I promise you. Like you won't be able to we won't be here to really see it, but I'm telling you, in less than 100 years, that'll be looked back as like big giant brick phones. Seeing somebody die like in an old movie, it'll be like, whoa, this is an oldie. Maybe we should watch something else. Like my wife, she cannot watch a movie with like old hairstyles and old clothes and stuff. It's like she can't do it. Yeah, far out, Ben. No, but I mean that's for real. Like, we will conquer, a lot of that mortal problem. And at that point, we will. And at that point, those things will be death itself will be looked at as so strange. Like maybe people will choose to die or they're transferred to other beings. Uh, we only have a minute here, but we're getting close to reading. We have chips. We have a chip installed from Neuralink in a human now, and we were reading pigs and monkeys' brains and stuff. And we're getting close to. We'll be able to understand animals, but eventually, we may be able to transfer our consciousness into an animal, or vice versa, or switch and swap them, or add another person's consciousness to your own brain, like on top of yours. Like just bring in all their information and their life experiences. I mean, we don't think about this stuff right now, but in the future, that'll be right on the cusp of very popular things people think about in 150 years. That'll be everything else that we find futuristic will already have been well accomplished, and it'll be the telephone. And the cutting edge thing at that point, which they will do, is transferring a human consciousness into an animal or back and forth, or you know, reading animals' thoughts are literally less than a decade away. That's already happening. Uh, so be ready for that as well. We're going to be like, oh, like when a fish gets eaten by a shark, it's going to go like, oh no, dude, that hurts me. We're going to like, oh shit. There's going to be way too much sympathizing out there for the natural ecosystem. Good morning, Abdul. Welcome. Oh my goodness. All right, the market is open. Let's keep an eye on QQQ for a second, see how the market responds to these higher prices off the open. I am very curious about that. Also very curious to see how rates move off of this PPI information. And then gold, you always want to look at that, and oil. And then how many stocks are moving up versus how many are moving down off of the open. That is just such a great indicator of what's going on. And right now, just 30 seconds in, 50 seconds in, almost a minute in. Well, actually, it just shifted, but it looks like okay. At the moment, it's about 50-50, possibly 55-45 green. Okay, let's see how this continues. I'll take a quick look at the 30-year. That'll be very interesting to see. Probably the 30-year will pull back, and it's put in a pivot. Just very hard to say or know whether or not it's going to now deflate from here forward. Yep, we can't predict that yet. Okay, the market is actually it's selling off of the open. Look at the SP 500 on that. Yeah, we're getting a similar move off the SP 500. That could be some profit taking off people who bought the dip yesterday, potentially. Let's see how this plays out. Looking across all sectors, I mean, we're only 2 minutes in, but looking across all sectors, the only thing that looks supported is utilities. Everything else is selling off of the elevated gap up open, and base materials are up. Utilities, everything else is selling off. So this is telling me even value that safety and defensive stocks are supported, not defense stocks, remember, defensive stocks like Staples. But even Staples are pulling back a little bit. But utilities are remaining strong. How about healthcare? Yeah, healthcare is selling off as well. Only slightly. All of them only slightly. This could be just short-term profit taking because none of it makes a whole lot of sense, especially with utilities remaining flat. Let me take a look at this utilities here. Yeah, off of the open, even utilities are sideways. So we have kind of like all tides falling right now, but it's very minimal. Different word I wanted to say, but I can't find it right now, but we'll go with minimal. You guys who showed up here at the market open, welcome, and it's great to have you. But just remember that we're talking about what's going to be happening today for 30 minutes before the market opens. So tomorrow and in the days to come, try to be here 10, 20, 30 minutes before the market opens. And we're here talking about every opportunity, penny stocks, growth stocks, interesting concepts, things to think about on the market and, and in life and in general in science. Yes, it's just you're just getting up. I understand, but it's good. If you do end up showing up early, we're here. We're talking about some of the stuff that's going on right now. What we're doing is we're just assessing off of the open. We're almost 5 minutes into the open now. How the market's responding to the PPI report this morning. So a recap on that. PPI is a more leading inflation index in some sense because it is the producer's price index. They used to call it the wholesaler's uh, price index, and it reflects price changes in and throughout the pipeline and costs in manufacturing and creating the products versus consumers, the end price that consumers are buying things at. And so it's 6 months ahead usually. PPI is a good 3 to 9 month window in advance, depending on which slice inside of the PPI report you check out, which industry. It is more leading, and the PPI numbers came in good this morning, cooler. So things are getting cheaper out there on the cost side of things, of manufacturing and creation of products and services, and that's a positive. And so that's why the market went up this morning. And right now, it looks like there might be just some initial profit taking because I think people may have bought the dip yesterday, and then it'll start to settle. All of the information from the last 2 days, this what I call the trifecta of fuckery, which was the CPI, the Fed report, followed by the PPI and jobless claims this morning. But altogether, they was pretty flat, neutral, and okay. That's how I would describe it. Okay. Green light, maybe yellow to green light, right in that region. Nothing, nothing too alarming. Good morning, Randy. And so we need to watch. Look at now, actually, utilities are selling off. Now, if we look at other sectors, we might be able to say something about the total picture. But my first instinct is I wonder if all sectors are selling off or if something else is finding support already. And if so, then this is rotation out of defensives going on now and into something else, maybe growth. So what we have to do now is flick through different sectors. But we can just quickly go over right over to the QQQ and see what's going on there. Yeah, the QQQ has found support, the growth market. Now, if my thesis is correct, that there's now rotation coming out of defensives, you could call it risk off or low risk, and into higher risk innovation, growth, future cycle, business cycle. If that's true, then when we go over to the S&P 500, we should see it worse off than the QQQ because it includes more value stocks. Let's see. And it is. In fact, it's making a new low right now on the day, zigzagging down. So we go back to the Qs, and you can see right here over the last 7 minutes, the Qs have remained supported and did not make a new lower low. They did not make a pivot. And now 1, 2, 3, 4 pivots down to a low. We're now in the middle of the opening range so far. Whereas S&P 500, which includes value stocks, and value stocks are considered lower risk, it is making new lows. And so that's a pulling money out of value. You can go to SPY V, for example, and you can see it more pronounced. See, SPY V value stocks, only the value stocks on the S&P 500 are down, 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 straight down. It's just sucking. It's an ATM machine. Give me my money. Give me my money. I want to go put it in Palantir and I want to put it in future stocks, growth stocks. So now we go over to SPY G and we cut the SPY in half by just the growth stocks. Go to SPY G and look at that. That's up. In fact, it's made a new high already, even more so than the QQQ. Oh, QQQ. And if we go over to utilities and healthcare, those are defensives and staples. We'll probably see a more flat outlook, although healthcare probably perked up a little more because there's a lot of biotech and AI and technological enhancement over in healthcare that you could kind of gives it a little bit more of a growth profile. But let's go over to Excel utilities, right? Utilities, yeah, they're down strong. Not even as strong as value stocks, but yeah, utilities down. Value, everybody wants out of value. They want that growth. They want that growth. We go over to staples, and yes, we're seeing ATM withdrawals from staples. Give me my money. Give me money. I'm going to go put it into growth. XL um, V healthcare now. Let's see if that's a little more resilient. It's not actually, not yet anyway. It seems to be also responding. Give me my money. ATM machine, please. We go back to the queues. Off of the open. Look, okay, now the queues are kind of they're lagging this drop, this pullback as far as rotation goes, and they're leading in support on the market right now. But we are testing lows on the queues at the moment. We go over to consumer discretionary. And that's actually pulling back and making new lows. So that'd be like Amazon, but more companies that are retail that aren't daily staples, such as like an underwear company or something. Um, More consumer discretionary, which is like luxury goods or approaching that profile, things that you spend money on only when you have disposable excess income. But I think we're seeing the cues now with a little bit of a change in that story, just for the moment anyway. The cues are making a new low at the moment, so everything's going to be pushing down. But there was that signature there, and you should always remember that today, throughout the day, that signature was there, pulling out of value and putting into growth. It's not necessarily holding up right now, the whole putting it into growth, but actually, relatively speaking, it is. Growth is responding better and more relatively stronger than the other, defensives and staples that I mentioned. So we're only like, 11 minutes into the market. And we already got that reading. So that should be a very, I don't know, eye-opening for some of you on how you can interpret the market. Every day you can do that. Every day, so you can kind of figure out what's going on between value and growth is, a really good starting point, like a basic starting point. between value and growth. But there's other things out there. It can get quite confusing on some days. It can be too much for me, and I'm like, I don't know, and that's okay. You got to be okay with having days where you just go, I don't know, because it's like having one of those Dungeons and Dragons dice with, like, I don't know, 12 sides or 16 sides. It's a very multifaceted thing, and you roll the dice, and you've got, like, a bunch of them, and you roll them, and you know what some most combinations mean, but sometimes you're like, I don't know. I'll know what it means when it's 1, 11, 7, 14 or whatever. Uh, but I can see that financials are pushing down some of the strongest, and banks have been reporting this week. So that's interesting to note. And let's see, like I said, SPY and value, like look at my screen. I'm going to turn on my annotator and I'm going to mark up for you a region here for you to look at on my screen. Change the width. Width. There it is. Okay. Uh, right here, S&P 500 and the QQQ. And this is, I didn't even mention it. I just sort of presumed, and I shouldn't, because you guys are, many of you are still learning all of this. And anyway, some of you could be refreshed. But what I'm talking about is the differences in the exact same moments of time between one asset class and another asset class, or one ticker, another ticker, et cetera. So what I'm saying is here, for example, the Qs came off of the open and remained pretty supported here. Okay. Whereas the S&P 500 came off the open and have been markedly down. And that is because the S&P 500 is filled with value stocks and things like Campbell's Soup and consumer staples and defensives and things like that. The growth stocks really aren't. They're the innovative leader companies of our future, at least the biggest ones, the bigger ones. And another thing to note, you wouldn't know that unless you knew how I had my system set up, is these green, gray, and red bars that are here. Those are yesterday's high, close, and low. And so you could see that the S&P 500 is struggling, staying in the wick area between the close of yesterday and the high of yesterday. That's the wick. And it's struggling and it's tapping the close, right? Whereas the Qs have broken over yesterday's highs, and we're in high territory, and we're staying above the wick and up in that whole area, and we're holding up above that area. So even if the Qs were to fall back and the SP 500 moved similarly, the Qs are in the lead. You see, they have relative strength, and you can't really um, analyze relative strength unless you can compare two things, because it's a relative, right? So even SPY compared to QQQ is not the best, because QQQ is growth stocks. S&P 500 includes many of the stocks that are in the QQQ, like Apple and like a lot of the big Nvidia. A lot of the big companies in the QQQ are also in the S&P 500. They're different indexes, but they're not mutually exclusive, I guess, is that the word? And so if you really wanted to do an apples and oranges kind of comparison, well, I mean, like I said, you could compare S&P SPY G, which is growth stocks on the S&P 500, versus SPY V. That gives you like a profile of the value response and the growth response. But you can generally get a pretty good sense for that, a more liquid, wholesome sense for that, from QQQ and SPY, because they're just more liquid. SPY V can be, see, like here's a minute that went by where there wasn't even a trade, and SPY G, similar things happen there. So not a lot of people trade those ETFs. Their values are pinned to the performance of the underlyings, because it's an index, but it's like a sub index. But if nobody's buying or selling, then it doesn't print, a trade candle. The candlestick won't, really show up. It's not super liquid. It's kind of hard to see on SPY V and SPY G. Um, but we popped over to them. You saw me do that, and we got some sense of things, even though they were a little bit more illiquid. So I just looked at SPY and QQQ, and I can see that if there's a difference in SPY and QQQ, it's because of the difference, right? What do they call that? Uh, Not contrapositive, the intersection, not like the non-intersection part of the two thing logical, fields. You have A and the C, and then the part that is mutually non-exclusive, something like that. Anyway, I can see that in the SP 500 and the difference. You got to get good. That's an essential skill to being an excellent trader. Let me clear that off and let's take a look at what we got here. So you can see here on this chart now, hopefully you can, see that on my display, which is the Qs. You can see that it's holding well off of the open, a certain opening range. Now we go to SPY, SP 500, and it's just bleeding and bleeding. It keeps making lower lows and lower highs. Now, a lot of the market noise you'll hear is based off the S&P 500. It's like the world's most trusted index. But as traders, we're more concerned with the QQQ and all of the elements in growth stocks. We're not interested in value stocks and Campbell's Soup and companies like that, which are on the S&P 500, um, because we trade small, medium length moves, small to medium length term duration moves. And the strongest moves come from those growth stocks, not from the value stocks. Unless Campbell Soup can come up with some innovative AI technological revolution for their soup, I don't think we're really going to see any, growth prospect over on Campbell's Soup. But for example, every day, 99% of the time, so you could say every day, the Qs provide 1.31, so 31% more return on a move, either up or down, than the S&P 500 each and every day. Now, in total, obviously, that's not you couldn't really necessarily say the same, but the move intraday, the amount that these things move is 31% more on the QQQ. So, as a trader, you don't give a shit about S&P 500. You want to trade the Qs. If you're a futures trader, you shouldn't be trading ES. You should be trading NQ, or MES. You should be trading MNQ. So you want to go after, if you're trading indexes like that, TQQQ should be fairly liquid enough if you're going to be trading anything market wise, or MNQ or NQ on the futures, so you can get more return. So like only 1% of the time when the S&P 500 is doing better than the Qs, and that would be when there's some kind of like heavy rotation out of growth and into value. And even then, probably the S&P 500 is going to be flat and the Qs are going to be pulling back. Damn, Elon Musk just posted an amazing photo that was taken of his Starship launch. Look at this. I'm going to paste it into the group here. That should be like on a Time magazine cover. Wow, what a shot. That's photographer of the year right there. Great shot. Okay, guys, let's go back into the group. I really don't see. Oh, look at these meters here. Is another thing we try to pay attention to. These are the kind of growth meters for the day. We're seeing only about 30% green and 70% red in the bigs, middles, and smalls on growth prospects, leading edge growth prospects. And so it is going to be a muted semi pullback day. So far, that's what's happening and transpiring for growth. And we're seeing that on the Qs. It's not really going anywhere from the open. We're just kind of right? SPF 500 is selling off, but Q's holding. So remember, that means relative strength. Just because even something's going down doesn't mean it doesn't have relative strength. If it's going down slower than everything else that's going down fast, that other thing that's going down slower has strength. But today we're seeing some strength in growth. and we'll see how that fleshes out over the whole day, and maybe even tomorrow and next week. It's gonna be interesting. And next week, earnings season and releases are going to ramp up. And we do have class tonight, Carl. Don't forget, we got master class, everybody. Tonight, we'll be talking about some very interesting subjects, especially chart reading. So make sure to make it. It's 9 p.m. Eastern, and usually goes for a couple of hours, and it's only once per week included in your membership. So it's only for members. That's one that's only for members. And whatever you want to learn, you're welcome to ask questions, and I will show you what I know about it. That's what I'm here for, to help you. Help me help you. Show up. All right. See you tonight in class, 9 p.m., everybody. And back into